Here's why the scan is shorting Oracle Corporation right now. The exact levels come at the end. Judge the evidence yourself first. Here's the route. Patterns and indicators first, then where the institutions are positioned, then the exact trade plan. 3 layers, 1 verdict. Let's move. Here's the daily chart. 60 bars of context. Price action is in a downtrend of strong strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at $112. Red is our SL at $150. Those are the 2 numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up 1 chart pattern on the daily, double top. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. Before the detail. Tomorrow's scan is already scheduled. 1 tap now and you won't miss it. Pattern number 1. This is the double top. It's a bearish formation with 2 out of 3 strength. 2 peaks. $199.74. Measured move target $160.75. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is plunge at 22.2%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee. So we still need our SL in place. Candle signal number 1. A bearish Marubozu just formed on the very last candle. See the dashed box on the chart? That's where it printed. It's a bearish read with 3 out of 3 strength. Strong selling, no wicks, decisive move. What you want to see next is follow through on the very next bar. That's the confirmation that turns a signal into a trade. Here's the level map, and where our entry, target, and stop sit inside it. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SS inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of 0.25, technical 0.111. Positive numbers lean bullish, negative numbers lean bearish. And what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 34, and that tells us we're in a strong trend regime. Important because some strategies only work when ADX is above 25. On-balance volume is bearish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. And now, the part I actually build the trade on. Retail signals start the idea. Institutional positioning confirms it. Let's bring in ICT and smart money concepts. On the daily chart, the SMC bias is bullish, with a ranging market structure. The most recent order block is a bearish zone between $197.49 and $211.74. That's where institutional orders are likely parked. We've also got an unfilled bearish fair value gap between $139.65 and $140.45. Price tends to revisit these imbalances. Most importantly, we just had a BOS bullish move at 200 euros or won, a key structural signal that smart money traders watch closely. Next up, volume profile. It shows where the heaviest trading happened, and those prices act like magnets. The point of control, the most traded price, is at 143.19 time. The value area runs from $133.98 on the low side to $226.06 on the high side, meaning 70% of all volume traded inside that zone. The signal here is bearish. Price, 131.54, is below value area low, 133.98. Bearish, institutions distributing. POC at $143.19 is resistance. Order flow time. Net pressure from the last stretch of candles, buyers versus sellers. Over the recent window, buying pressure accounts for 36% of volume versus 64% selling. The overall flow signal is bearish. And to round out the indicator suite, 3 more advanced reads. Money Flow Index. The volume-weighted RSI reads 13, signal bullish. Williams %R is at 100, bullish. Chaikin Money Flow reads 0.39, bearish. Together, these 3 confirm whether the volume's actually backing the price move or whether it's just speculative noise. Now, even though this is a technical analysis channel, we always sanity check the fundamentals. Here, revenue's growing 21% year over year. That matters because it tells us whether the chart is rhyming with the underlying business, which is when the highest conviction setups happen. Zooming out for a second, let's talk macro. On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR%. Here's the thing, a setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. Levels in about a minute. If this format works for you, join the channel. It's daily. Before the trade, the part that separates traders from gamblers, risk. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max, and that decides the share count, not your gut feel. Get this right and you can be wrong 10 times in a row and still be in the game. Get it wrong and one bad trade can take you out. Everything stacked. Now, the levels. We're shorting near $130. Target sits down at $112. Stop loss above at $150. Risk to reward 0.92 to 1. That's the asymmetry we want. For every dollar we put at risk, we stand to make 0.92. Horizon, roughly 5B. That's the setup. One more time. This is educational, not financial advice. Markets are risky. Trade your own plan. Never risk what you can't afford to lose. That's the play. Like if it helped, subscribe if you want tomorrow's. See you at the next scan. So zoom out for a second. What we just walked through on ORCL, that's a short bias setup projecting roughly 13.9% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow, they all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now, here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. If this stacked up for you, say so in the comments. Trade safe. See you tomorrow. Same time tomorrow. The scan runs, one chart wins, and you get the full breakdown. Don't leave it to the algorithm. Subscribe and turn on the bell. See you in the morning.